Cook, your host here at the Credit Union Connection. I'm here today with this wonderful gentleman, Scott Earwood. Welcome.
Thank you. Thank you for having me. Appreciate it.
Absolutely. And Scott is the head of community banking division for White Clay, which is a fintech that guides financial institutions, credit unions, and banks to build deeper and more profitable relationships, which, of course, who doesn't want that? Scott, you want to go a little more into detail on yourself and the company?
Sure. Yeah. White Clay, we've been around for about 19 years. We started in the large regional space. Our founder did a lot of this work at Bank One back in the day before it became Chase and Bank of America. And then we were helping other regional banks with the same types of kind of configured software to help drive this. So I've been here about 12 years, and about 5 years ago, I was like, hey, I think we could help the community banking space and the credit union space. And so I'm a thief. I stole the greatest hits from the large banks and created a sort of a standardized platform for the smaller banks and credit unions to follow. And then we've made some other alterations, of course, to help credit unions a little bit more. But yeah, that's our goal. Is we want to bring together data, add some intelligence to it, but then actually drive action, because your data is wonderful, but until you do something with the data, you don't make any money, you don't make a difference. And so that's really our focus, is create some transparency and then cause action so that we can drive a better return for both the member and the credit union.
Right, exactly. So, and I'm curious to know, you mentioned there are a few little differences that of what you do for credit unions versus banks. What are those?
Yeah, so obviously the hardest one for me has been the nomenclature, right? I've worked in banks for a decade, being in my career too, so that's been a little bit of a challenge. But a big part is, I would say, um, everybody wants to help, right? Both areas want to help people. Credit unions just a little bit more focused on that, a little bit more forward on that, and want to, for instance, our credit union doesn't, the ones we work with, they don't care about seeing a RAROC or like an efficiency metric. They want to see revenue, but they don't care as much about efficiency, and it's sort of a foreign concept to a lot of the reps and a lot of the people inside the credit union. And then the other big one, and we'll probably talk about this some today, is the thing that I had to get used to as well, is that the number of members really matters. And so we have a history of creating relationships, right? So if you're going to be a relationship bank or a relationship credit union, you actually need to be able to see and know those relationships. And those often come in the forms of multiple entities or multiple members are in the relationship. And so if I think, for instance, like my wife and I, we both are a member. Well, I don't think about it her money or my money. I think about it as our money. And I may have a HELOC, but it's in my member number. You don't want the credit union asking her about a HELOC, right? And yet the systems are kind of set up because that member number matters so much, not wanting to kind of, at most of our banks, we bring all that together. And so their number of clients is much lower than what's tax entities on the system. Whereas credit unions, we've been trying to figure out ways to get around that, to let them have the best of both worlds, right? So I know the members number is still important, right? It's on the call reports, it's on everything. It's really, really important. But in reality, the number of relationships, and if you think about it in terms of the way the member thinks about it, it's probably it might be bigger than just what's in that share or what's in that member's account, especially now that credit unions have gotten into commercial world more often, right? Yeah. I mean, I've got an example where a member is a $7,500 balance, $250,000 HELOC. That's his relationship under his tax entity, right, under his social. Well, he owns 9 businesses, and they've lent $20 million to him, and he has $7 million in deposits. But if he walks into a branch and they look him up by his name or his social, you just see 7,500 and 250, and you're not going to necessarily treat them any differently, but the way he's thinking about his money at the institution versus the way the institution is can be very different. And we try to help
Hmm.
bridge that gap.
And you skipped ahead in my list of questions here, but
Oh, sorry.
that's all good. So yeah, so you guys did this research, found that roughly 2/3 of financial institution users don't feel seen or known by their FI, by the primary FI. And it's a little better for the community banks and credit unions, 63%.
Right.
Um, Still
Still
a
not
good
great.
majority. Good majority. So, are we defining feeling seen the same way our members or our customers in other cases are we measuring feeling seen the same way the members do?
So
Yeah, go.
I do think we're not exactly matching up with what being seen means, and I think some of it's the digital, right? Like, how do you still provide humanity in a digital banking world? That's
Mhm.
an important one. But then also, they're going to use most members are going to use other institutions, and how do you have that connection to have the conversation about their finances? And the other part is, we know that roughly only 50 to or 40 to 60% of your members are actually primary transacting members with you anyways. And
Mhm.
so because of that, your lifetime value drops. They're dealing with other people, and then therefore they don't think of you as their primary institution. I always say that, if I ask you where you bank, you're gonna say where your primary account is, right? You're probably not going to rattle off you're not going to rattle off Amex and Venmo and all the things you might use. And with credit unions, now that more people can become members, do I just have some money parked there to get a better return on my deposits or a better car loan rate? But my primary account, I'm not moving from, XYZ place. And so
Mhm.
I think part of it's understanding what that member is, but then also back to the relationship piece. Do we know the full relationship? And what historically has happened is your reps or people in your branch that know the member well, they do. Or even the commercial side, the commercial banker knows them, but it's not institutional knowledge. There's no data behind the scenes to help connect. So when your rep retires, right, or your banker moves to another institution, does that knowledge leave with them? And then therefore, I think that erosion has also caused more and more members to not feel seen or heard by their institution, because I would always go talk to Sue, and Sue now retired, and now nobody knows that I do this or that, and that's a challenge.
Absolutely. That's interesting because, I mean, first of all, we've got the slew of baby boomers who are retiring or at least are getting close to it. Not to mention some of the older Gen Xers are probably
Yeah.
starting to reach there. Not that anybody pays attention to us, but um, yeah, I think, having that warehouse, I mean, I didn't really think of it that way, but having that institutional knowledge in the data, so you don't need Sue to be the one to always serve that member. There's still like something showing you, or whoever's at the counter, or showing I guess the mobile app even, you can say, okay, this person's car loan's 3 years old. Let's offer a refi, something along those lines. So yeah, I think data is so important. And I think it's also interesting too, because credit unions COVID kicked every business in the rear as far as like upping their digital game. But for all the talk about data analytics in the last decade, and now we've got AI to sort through the data analytics. It just seems like nobody is doing very well at it, though. Um, can you give
I
some
would say
examples?
nobody. Yes and no. And I say that is, I think plenty of people are doing well in little verticals or in spaces. Nobody definitely has it figured out across the board. I wish
Yeah.
we did too, and we don't. So, I think that's such a broad, and especially in the credit union world, most of them that I talk to are expanding their walls and expanding their membership and expanding who can join, and so in households and areas they were never in before, and how do they still do that, and how do and again, is it just going to be car loans that drive it now, or is it going to be other things? And so using the data to segment customers into different segments and knowing where you're making your money, where you're winning, where you're losing, where we need to make decisions. A credit union client, we were talking with them, and they're like, we need to get more debit cards in people's hands. And so we pulled up really quickly on our dashboard and said, actually, we'll look into that. And so we sorted a page that showed active debit card usage, and their debit card usage was pretty good at first. Overall, it was like 60%, 65%, which isn't bad.
Mm-hmm.
However, when we filtered the member list by transacting members, they were at 90%.
Wow.
So their issue wasn't they needed to, and this is where data can drive some of these things and start to be a little smarter of your strategy, is they didn't need to just hand out more debit cards, right? They needed to get more members to actually be primary members. Like, instead of, I'd sometimes call them members versus users, right? And we don't need users that just use it for a credit, for like a credit card, or for a car loan, or for a better rate on their savings account. We need them to be active members, and
Right.
understanding who those are can help drive some of that strategy, and then it can help them feel seen, and you can start to cater to certain demographics, and not even like meaning black or white or male or female or something else like that, but like demographics of types of behaviors, people who value these types of financial things. And so
Mm-hmm.
that's what we try to get into. And I think credit unions are starting to, and I've seen plenty of credit unions jump into data,
Mm-hmm.
sometimes haphazardly, sometimes with and all with good intentions. And then I've even seen plenty that are starting to realize they have to partner, right? And
Mm-hmm.
so for AI and things like that, they don't want to fall behind. And so I see in some cases some smaller credit unions, when I say smaller, I think a billion to 5 billion. I realize that's big for some credit unions too, but
Very big.
um,
Yes.
I see them starting to partner with other places to do AI, and to
Mm-hmm.
take, because and it's all around, and it's such a great thing. They want to take care of their members, and I think they understand the downstream effects of taking care of their members, that their communities are stronger, and that's the great part about it. I would just like to help them evolve a little bit, and that understanding that if you make decisions just by your gut all the times, you're sometimes going to give away a lot more revenue than you mean to, and that's going to prevent you from being able to help even more members down the road,
Mm-hmm.
especially in the commercial world, especially in
Mm-hmm.
commercial lending, right? Of how do you price that appropriately? How do you price for risk and all those things? And it's a new world for most credit unions, or at least a lot of them that I'm talking to. They're really getting into it. You know, you have a few car loans fail, or you have a few HELOCs fail, it it adds up to maybe $1 million. You can
Mm-hmm.
lose way more than that on one deal in the
Yeah.
commercial space, and
Mm-hmm.
that can really hamstring your ability to do other things to help other members.
Yeah. Yeah. Definitely. I can see that. So, and you touched on this a bit earlier. Again, I'm going to go back to the research that you had, but 61% say they've never had a personal relationship with their primary institution. That it just seems how um and so um I can't imagine that anything's more personal than your income, your home, your mortgage, your like these are things that are very personal to people. And so it just, I don't know, it's shocking that nobody, that people feel they don't or have a personal relationship.
Yeah, I think it's the personal part
Right.
that drives that. Like, I know when I was a banker, like I was amazed. I quickly learned, because I was young, right? I became a branch manager for a bank at like 22, like 3 months into joining a bank, and I was like, I don't know what I'm doing. They're like, it's okay, just go sell products, and and so I quickly learned that people are emotional about their money, and that's
Very.
okay, right? Completely understandable. But they just want someone to hear them, especially when something goes wrong. And even if it's the credit union's fault or the bank's fault because a mistake was made, it's your chance to be a hero. And
Mm-hmm.
I think with the turnover and slash, you think back 20 years ago, you called in. A lot of people called in to get their balance, right? They couldn't get it on their phone. They couldn't deposit a check. So anytime you got a check, you had to go into there was just that more personal information. So I think some of this is just the natural
Mm-hmm.
digital or digitization of it. And I think that's the challenge that credit unions and banks both will have going forward is how do you make them feel comfortable that when they're not going to come in for daily operational things anymore? That ship has sailed. That's gone, right? Nope. I mean, however, how do you provide a place where they trust you as a place they can come talk about their finances, right? And especially in this world where are you going to go talk to your institution or are you going to ask ChatGPT?
Right.
Right. And so I think and I think the way that we can help, meaning the whole industry can help with that, is knowing more about them, finding more, trying to be intentional during onboarding, even with digital customers,
Right.
of finding ways to learn more about them so that we can meet them kind of how they are and where they are. Because, as it currently still is, you got to come to our location, right? You got to come talk to us during our hours, right? Like, and how eventually I think the industry is going to have to evolve to more Zoom meetings potentially. And I think COVID helped a lot with that, right? Like
Oh yeah. Oh,
everybody's gotten a lot more comfortable, but I think a big chunk of it is products. We've pushed products and we've created convenience in forsaking some of the connectedness. And so
mm-hmm.
one of the things we talk about here, and by no means do we have it figured out, but we want to try to help make it better is, again, I think I said earlier, but providing digital experience, but with humanity, right? Still
Mm-hmm.
having a connection. And I think that's going to be sort of a big frontier because the studies say now that I get all the generations confused. I apologize, but the youngest actually generations now actually enjoy the interaction and
Mm.
want to come into branches some. Whereas I don't want to come into a branch unless something's gone really wrong, right? Either
I was on the
or
board of
something
my
great's
credit.
happened where I've got a check big enough that I can't deposit it on the app.
Yeah, I was on the board of my credit union. The people in the front line didn't know who I was because I barely, other than board
That's right.
meetings.
So
Yep.
I think that's when we say feel seen. I think that's part of it,
Mhm.
right? And there's just more information than there ever was before. So where they would come and talk to you about a problem before, they Google it, they look up it on ChatGPT, right? They do one of those things now, and so our ability to service them has really gone up as far as without us being involved. But that's also kind of bit us in the butt, right? Of we don't have those personal touch points
Right.
as much. And so I think we've got to, as an industry, come up with ways to have more of those. And
Hmm.
so um, data can help that because if we can know that something's different or something happened. And by the way, if you're the primary transacting bank or credit union for that, their transactions will tell you the story of what's going on in their life,
Oh yeah.
right? And your members already think you know it.
Mm.
Right, like I'm sure when you were back at the credit, like they'd come in and be like, "Well, I know you saw that I wrote a check for this." I was like, "Yeah, sorry, I wasn't monitoring your account." Right, like, and so, but I think pretty soon we can start to build out things that say, "Oh, their direct deposit changed. Let's call and congratulate them on a new job, or let's talk to them about a 401k rollover, or they're 6 months out from a renewing their car, or some, they've started shipping money every month to this place. Did they get a new loan? There's lots of things that are the data can help us create meaningful and valuable interactions. That's the other part is I think where first places both banks and credit unions started with this is, well, we got to reach out to our members more. But we were just like, it was like check a check box, and it was a list, and here's the 7 people we got to call today. And we looked at it as valuable. I don't know that the members did.
Right.
And finding that intersection is going to be an important part of raising that number. That's a
Yeah,
long
because
one. Sorry about that.
well, and the other thing that your research found was that of all financial institution users, half would leave their primary financial institution for personalized financial guidance. And one of the things I read recently, earlier this week, was research that, Gen Z is the most likely to use advanced digital financial planning tools. And so, and the ones that are least likely to get switched on are actually credit unions, according to your research too, 44%, so below the average. Um, but, that is the kind of thing that I think you were talking about, where credit unions knowing somebody's data, if you can see all their data because they've aggregated it all into your app or whatever for you, and then you dig right into everything. Doesn't matter if it's held in house or not.
No, that's exactly right. And to be fair, I mean, we do some of that. We don't do all that. We don't have it figured out. And there's other ways to do it. And I think I'm excited to see what the industry comes up with over the next few years and the other part too is I think the reason maybe there's been tons of change. However, other than COVID, there hasn't really been an event in the past, 17 years now almost, right? The last real like loss event was back in '08, recession type. Like,
Yeah.
I'm interested to see what happens after the next one, right?
Mm,
Because then when times are a little tougher, that tends to drive more change, both
right.
from a user or member perspective as well as from an institutional perspective. And so
Hmm.
that to me is going to be fascinating. And it's going to be how do we evolve this? How do we take advantage of it? Right? We've got more capabilities now than ever, but too many times the capabilities are this is a cool idea rather than this is a business reason or this
Hmm.
and it is a business reason. It is truly a business reason, meaning the credit union came up with it most of the time of what's going to help them more so than what's helping the member and us. And
Mm.
that's credit unions are a little better in that. And I think that's why that number reflects that than banks. But right, I mean, when you're developing the next program at your credit union, you're like, this is going to help members, but how many times do you go talk to members about it?
Right,
Right.
right.
How many times are they part of the process here? And they don't have to be completely right, and how many times are we doing things with the right intention, but don't have the data to back it up to know, is this really what we should be doing? And I think that intersection is where the future of making that number go up is.
Yeah, yeah. No, this has been great discussion. I love the data, everything that has data tied to it. You can measure it, you can make it a strategic goal, that kind of thing. And so, yeah, but I always allow my guests the final thoughts here as we wrap up. What would you like to leave our credit union audience with?
Wow. Um, well, I would say that I'm excited about the future of what's going on. I think, the credit unions are evolving, right? They're expanding. And I think I'm excited to see where they take it. Cause again, I see some adoption that even some smaller banks aren't adopting as fast as some of the credit unions are, at least from my whatever limited view that might be. Um, and so I'm excited to see that. But then I'm also, who's going to come up with that next way of truly connecting, right? And I think that lives at the intersection of data and customer service or member service and some innovation.
Yeah.
And I'm excited. I think I think if we talked again in 10 years, you know, we're going to see something that parallels the change that, you know, online bill pay and digital banking did, right?
Mhm.
Like as far as how people interact with banks. And I, I hope it goes well. I think it will.
Well, thank you so much for your time and insight.